Today, the main economic expert we're discussing is the Federal Reserve's decision to pause interest rate cuts until 2025. This is a cautious step aimed at maintaining stability in the economy. Raphael Bostic, head of the Federal Reserve Bank of Atlanta, emphasizes the need for patience while focusing on inflation and job growth, as we explain the implications of this decision and what it means for you. In a significant development on the economic front, the Federal Reserve has decided to play it safe with interest rates, choosing to hold them steady until at least 2025. Raphael Bostic, the influential head of the Federal Reserve Bank of Atlanta, has made the institution's stance quite clear. We shouldn't expect any rate cuts in the near future. Bostic, who plays a crucial role in the decisions surrounding monetary policy, is taking a measured approach. He is closely monitoring job growth and wage adjustments in an effort to combat inflation. Despite the slow progress towards achieving the 2% inflation target, Bostic foresees only one rate cut this year, if any at all. Inflation continues to be a persistent issue, slowing down the rate reduction process. Jerome Powell, the chair of the Federal Reserve, has echoed this sentiment, indicating that a little more time is needed to build confidence in rate cuts. This cautious stance is a significant departure from earlier predictions of multiple rate reductions. At this point, traders are merely hoping for one or two cuts. Despite concerns around the global economy, there's a sense of optimism domestically. The International Monetary Fund, or the IMF, has raised its growth forecast for the U.S., although it does warn of the challenges in managing inflation. In contrast, the Eurozone is grappling with modest growth, while China and India are expected to experience robust growth, potentially reshaping the global economic landscape. The IMF has urged caution in U.S. monetary policy given the economy's rapid recovery. Recent spikes in inflation have led some to push back their expectations for rate cuts, with some even speculating about rate hikes. The market reactions reflect broader economic anxieties, with some predicting a rocky road ahead. As we look to the future, some Fed policymakers are advocating for patience. However, banks such as Bank of America and Deutsche Bank expect a single rate cut by December. In conclusion, despite earlier talks of easing up, the Federal Reserve appears committed to maintaining its current course. The intention is clear: to ensure stability in these uncertain economic times. And as we know, in the world of economics, stability is king. In the coming months, while some Federal Reserve officials are urging caution, major banks such as Bank of America and Deutsche Bank are predicting that there will be just one interest rate cut by December. In summary, despite discussions about potential easing, the Federal Reserve appears determined to maintain its current strategy, prioritizing stability during these unpredictable economic conditions.